All right, it's Mike Dole at the mortgage firm, and I am here with Elizabeth Lopez and Tom Bennick. Every Wednesday at noon, we have an open forum. We'll answer all of your mortgage-related questions. We generally cover a topic. Today, we're going to talk about the Family Opportunity Mortgage, which allows you to buy primary residence for elderly family members, elderly parents, or disabled children. But sitting next to me is Elizabeth Lopez, banking forever, absolutely phenomenal customer service. Her reviews come in, continued on next page because they just can't write enough about her. Tom Bennick, the most patient loan officer you'll ever meet. Will meet you at the bank, at the house, help you walk through stuff. He has a couple grown kids, so he treats all of his customers just like his grown children. Anything to add from you guys?
I was just waiting for you to get going. Like, you done, Mike? No, just excited to talk about just these opportunities that we could help our elderly parents, disabled children as primary residences. As always, we're just trying to get information out there. Any opportunity we find, we never know who's looking for what, or just everybody's in a different situation, as we always say. So hopefully this is something that we could cover, and it'll help a few people.
Yeah. All right. So one of the things we'll toss in a little bit because we're just going to show. It's not popping up. Let's go ahead and get this out real quick. 1 second. Before we jump into that, we got a couple questions. So let me go ahead and have you guys address a few questions while I go ahead and get this screen up.
Well, my first thing I want to point out is the Heroes loan and the Heroes program, and I'm looking to see what the balance is left or how much money's left. I think it's something like 21 million.
21.
Hold on. I'm looking. So that's
21 million. I looked at it this morning.
You're right. 21.
Yeah.
So that money's going fast.
Yep. So, definitely a lot faster than we thought. And I guess at this point, I think bets are off because a lot quicker than we thought.
Because I won.
You did. Didn't want to say that though.
I'm not going to eat for a week. I'm going to bring my kids. I'm going to bring doggy bags. I'm going to it's going to be a field day at that restaurant. But all kidding aside, if you are still looking to get part of that Heroes money, you've got to go ahead and start applying for it now, or reserve your funds as soon as possible. Again, we don't get notified when that money runs out. We just got an email like last time saying that the money's gone. There's no more reserving the funds. So if you're looking to take advantage of the Heroes program, please let us at least get your loan in, get it locked, and get those funds reserved for you before the money runs out.
Yeah. And I know we've had this question before. No, we cannot reserve the funds if we're not under contract or we have nothing going on. So just please make sure you're filling out the application and you're working with your realtor. If you don't have a realtor, we have a lot of really good ones that we work with, but you got to get the ball rolling out at some point. And every realtor is going to bring you right back to us to get pre-approved before showing you anything. So so make sure you do that. But again, we cannot reserve the funds ahead of time just to save a spot.
But we're running through about $2 million a day or more. So, I mean, I'm not comfortable. If you're not under contract with those funds reserved next week, you're going to, and look, we've been wrong. Maybe it's early next week. That money's just not going to be around. And again, who knows whether they're going to refund it or not. I mean, I think their goal was that they said that they put the money out there. Now it'll just become available as people start selling and refinancing. But it just went out there last year, so it's not going to come. But people are not going to be selling and refinancing at a very high rate
right
the first year. So I'd love to see them put another round or a little bit more money out there and then just let it start cycling through. So it's just maybe always available to the first-time homebuyers.
For sure.
We're hoping they come up with something, but we haven't heard anything as far as it being extended or getting more money in that program.
No. Yep. All right, so let's go ahead and just do talk about. Well, we do have Roger though did ask about rates, and we don't want to look too much on rates though, but we'll touch quickly. It's a matter of following the 10-year yield, and it just has not been overly cooperative. So if we go back 3 months. we can see that it has been a slow climb when the projection were that we would be looking at slow declines. And we did have with the CPI, there was the projection that we would get some good news when the consumer price index came out last week, and you did for like a second, and it was in this one right here. So we had a nice climb. We had a quick jump though, but it was an early morning, and then it was just right back up again. So we're just looking for a little bit of relief here as they just keep hanging out in this rate here. So it's just a hard one to tell. But yeah, just we need a little good news on our side. So, I tell people you don't need to overlook too much, but you look at the 10-year and that tells you which way they're going. Are they going up or are they going down?
And I think what we might be doing is getting more towards a normal of rates.
Yeah.
So I don't think, it's going to come back down to the 2s and 3s, or let's wait till it goes to the 3s and 4s. I just think that it's going to be a normal, steady 6 to 7% rate on 30 years for a little bit. That's just my opinion, but
yeah. We don't see when I talk about coming down. I mean, the 10 years at 4.2. I'd love to see a 3.9. 3.9, 3.8 would make a huge difference. But even if it levels out at 4.2, 4.1, some type of a leveling, there is some, there is some security in that.
Mm-hmm.
So what we'll talk about on the family mortgage, though, is the family opportunity. If you have elderly parents, or you have a disabled child, the idea would be that you'd have to buy the house as investment property. So when you're buying an investment property, you need, 25, 30% down. We can technically buy some investment properties with 20% down. But they start, especially in this environment, it becomes almost cost prohibitive. Even at 25% down, it can be difficult. You start getting to 30% down, and you need 30% down if you're going to be buying condos for limited reuse. And the interest rates on the investment properties are going to be a lot higher. So what has been set up are these special programs of family opportunity mortgage, where if you have elderly parents that aren't able to provide them for themselves, you can go ahead and buy a house for them as a primary residence. So you're purchasing the house as a primary residence, and they're living in it. You can also do that for disabled children. So it's sorry, go on, Tom.
Oh no, I'm sorry. It was Scott. I was talking to Scott. I apologize.
Gotcha. So you have, like, if a child is unable to work or does not have sufficient income to qualify for a mortgage on their own, the parental legal guardian is considered the owner occupant. So if you have a disabled child, you can go ahead and purchase the house for them, and you can take advantage of the lower down payments, the lower interest rates, and some of the better qualifying. So even though it's not your primary residence, you will end up getting primary residence pricing. All right. The same thing goes for if you have elderly parents. The same thing goes with them. You can end up purchasing it for them as your primary residence, which again allows you all the better pricing out there.
Right.
So one of the things is, these are the ones that are weird because there's the potential opportunities for abuses. If they're opening this up, this is one that I would suspect is going to be verified. So for somebody who's looking at buying it, if your parents are renting or in a home and you're buying it as though it's going to be theirs, and you plan on Airbnb it or renting it or doing something like that, I would say that it's not going to work out well for you. Mm-hmm. Yeah. So if they're opening up these programs like that specifically for these reasons to help families out, these are ones that you want to make sure. Obviously for all loans you want to make sure, but particularly here, you don't want to be messing with this one. All right. So it's a great program. It's something that was done to really help families out, and we just want everybody to make sure that they're using it for its intended purposes.
Yeah, and just to elaborate a little bit on that, there is something called, post-closing in our industry. Post-closing means that, of course, the closing has taken place. You've got the keys to the property, but yet that file is still being audited. And so there is something called post-closing occupancy check. And that means that the lender or the investor is going to do some type of confirmation that the person is residing there as their primary residence. So if you're thinking that maybe we can get around that, there's no getting around a post-occupancy check. And if it does come back regretfully not somebody's primary, they can certainly call the loan. So
Yeah, that's actually happened once to me, and I keep telling everybody we need to know the whole story. What is it that you're doing with the property? And sure enough, they received a letter having to show proof that they were living in the property. Of course, obviously it was fine, but for whatever reason, like they know which ones they're going to go ahead and pick out. And like Mike said, I think this one's going to be one that they would totally look into, just because, again, for pricing purposes, you are getting the benefits through there. So if you're going to be getting benefits for it, for pricing as your primary, yeah, I kind of suspect the same thing. We want to make sure we're doing this one.
Yeah. Also, it's when you buy it, you are going to click off on the box that it'll be your primary residence.
Mm-hmm.
But it will be known that we're doing family opportunity, but they won't approve a loan as a primary unless one of the borrowers is going to be shown as living in there. So even though the child or the parent of the child or the child of the parent, when they buy the house, they will click it'll be a primary residence so it can get approved. No distance requirements too. Like if you're buying a second home for someone, it usually has to be about 50 miles away, or it has to make sense. I mean, I've done second homes where somebody lives in Wellington and they buy a condominium next to the beach house that they're a member of over on the ocean. So they want a place that's close to their beach club. We can pull that off as a second home sometimes. But here, if you want to buy stuff, if you want your parents to live right next door to you, you live in a neighborhood and your parents, you want them to have their own place right next door to you, you can go buy the house right next door to your primary residence and buy it as a primary residence. So it really, like I said, it opens up the doors for, opportunities to really help out family members.
And these are primary resident rates. So yes, the rates are a lot of, they're lower than they were if it was going to be a second home and or an investment property.
Now, you still have to qualify. I mean, you need to have a 620 credit score, but if you've got a 620 credit score and you're trying to put 5% down, there's a reason you have a 620 credit score. There's some issues that are going on. So the 5% down with a 620 credit score, we can end up with, we still have to run it as an approval. So we run it through our Fannie Mae system, which is DU, or we run it through Freddie, which is LP, and it has to get an approval. So although it's required to have a 620 credit score, if you're trying to put 5% down, chances are we're not going to get the approvals that we need for the 620 credit score. So, but I think it's a great program that opens up opportunities for people. And they're talking about, as opposed to what other opportunities. And I think we've probably all been through this, or most of us been through this with our parents, as far as, what are the things you can do. So as you're going through that list of, opportunities of what to do with your parents, if they're not ready to move into assisted living, or they don't already own a place. I mean, a reverse mortgage is definitely something we do. And that's something you'll want to talk to somebody about if they own a house. So you can do the reverse mortgage, or if you own houses, obviously you can just rent out to your family members. But this one here, if you're looking at buying something for them now, it's a good opportunity. And if you think it's a good time, maybe a good investment also for you in long term, you can help your parents out and maybe end up with a good investment yourself. All right. Now, I did want to touch base because I do have a few things up. I wanted to run over a little bit of the home run mortgage too. So we all talk about the hometown heroes, but the home run mortgage, if you're in Dade County has 90% of Dade County is within the home run mortgage. And what that is 3% down, as little as 3% down, and no mortgage insurance. So that's a pretty good program. Not having mortgage insurance is a good program. Now, again, you have to qualify. So, if your credit's a little bit lower, you still have to qualify. So this is a minimum 640 credit score. But again, if you have a 640 credit score and you're trying to qualify for 3% down, you may end up not being able to qualify for 3% down. It may require you to put 10% down or more. But not paying mortgage insurance can be a gigantic savings monthly cost.
And for home run mortgage, also here in Palm Beach County, I was shocked to see like how many areas too, Green Acres, Palm Springs, just local that, are on the map for home run mortgage as well. So lots of opportunity there.
Yeah. Look, we're going to pop in Scott Anderson. We got Scott Anderson has joined us in the office today. So we have our fourth person in here. I don't know. I think, Scott, I think we had you, though. We got you and Tom in the other office. I'm already getting a lot of feedback.
Yeah, I'm going to turn off my mic, and I have bad background, so I'm here as an observer today. Thank you for having me.
Well, we still got you, so we appreciate you coming in. So what I do want to do is just show you a couple maps for home run mortgage.
So with the home run mortgage, Mike is going to pull up some maps. The property does have to fall within a certain county, or what do they call that, as a zoning area? What's the legalese for it?
Yeah, it's certain zoning areas. So and it's not so much zoning areas, it's area median incomes.
There we go.
So if they fall within certain area median incomes, then they can end up qualifying for this program. So unfortunately, until we plug the address in, we don't always know. Now, these are areas that qualify often. These are the majority of the areas. Now, it's not a dead match, but it gives you a pretty good idea. So if you're down here and you're looking in the Miami area, you can see it's covering a lot. Until you start getting into the water, you got some pockets. In Miami, you've got pockets that aren't covered. But if you're in the Dade County area, there's a lot of Dade County that's qualified. So for anybody that's in Dade County, you absolutely want to see if this home run mortgage qualifies you. So I would make this my first choice for any first time home buyers. And you don't have to be a first time home buyer for a home run. Okay. So it definitely just opened up a lot of qualifying. Now,
it's kind of funny because even Boca has like little pockets here and there. Coral Springs, as you're getting into Boca, they have quite a few areas there too.
Yeah, Hollywood, Pembroke Pines, a little bit, Plantation. So you do have a lot of areas that are pretty good. Now, as you come up into Palm Beach County, it's kind of surprising we don't have more around here. But you have around Lake Okeechobee, the Belle Glade, but you also have a fair amount downtown. So you have a decent amount downtown in West Palm Beach. So it's a little bit surprising what's actually out there. We have a couple pockets up in Jacksonville, not a whole lot, but boy, if you can get qualified for this mortgage, it's a great mortgage. So I don't want people to think when we run out of this Hometown Heroes money that it's all over. And the Hometown Heroes money is nice, but you do have to pay it back. There's no payments, there's no interest, but you have to pay it back when you refinance yourself. But there are other programs out there. And even, if you don't qualify for Hometown Heroes or Home Run, sometimes for first-time home buyers within, certain income requirements, you can end up with excellent pricing as far as rates go and mortgage insurance and everything else. So there's definitely a lot of programs out there to try and help first-time home buyers.
Yeah, and I know we get a lot of I get a lot of questions about first-time home buyer programs. Doesn't necessarily mean that it's going to be an incentive money-wise, like that actual dollars that are going to be coming to fund the loan or being part of whatever. But like Mike said, we do have programs that that allow you to put a 3% down, or that just gives you better pricing. So sometimes it's not necessarily here's $10,000 for your down payment and closing costs, but there are programs out there that will help you with the pricing part of it. And see, like that's what I was talking about. Green Acres has that was a big area. Even Royal Palm.
Yeah, Green Acres, Lake Worth. Palm Springs. West Palm Beach. We're up through here through the Beeline. So that's a pretty good area right up through here. So and you have some pretty nice houses. Jupiter's got a tiny little spot there. Royal Palms.
Surprised.
Yeah. And this is a little crazy right here that we just have a small section out there in the Wellington area, but the bottom line on this one here is, does your lender have access to the programs, and are they offering you the programs that are out there? So, we have these things right here, and until we plug your address in, we don't know for sure what's out there. But does your lender have access to the programs, and are they offering them? And one of the things, we talk about the Hometown Heroes is, I run to people all the time where I say, well, were they looking at Hometown Heroes? And they're not. the lenders aren't looking at hometown heroes because they squeeze the branches on profitability. So they're loans that are tight on profitability. So many of them don't even offer them. So I'll tell you, when you sit there and you say $100 million in the whole state of Florida, I mean, our office alone has blown through a good chunk of that. So it is kind of amazing to think that, you know, our office is a good part of that 100 million, and our company, I can't imagine that our company, the mortgage firm, hasn't blown through at least 20 million of that, you know, or more, just as one company, and competing against you're talking about the behemoth companies out there. But yeah, we've gone through a good chunk of that ourselves, and we're proud of that. I would be embarrassed to have a program out there that was that helpful to customers and us not to offer it and try and sell them on something else that's more profitable to us. So,
and they did mention that the mortgage firm is the #1 lender, you know, that's with Hometown Heroes. So I know we're helping a lot of families out there.
That's fantastic, Elizabeth. I had suspected that. I hadn't heard that for a fact. Did that come from Florida Housing?
No, I think it was, well, it came from Florida Housing, but I think it was also, it was an email that we received, but it was, I read on there that yeah, the mortgage firm was #1. Mm-hmm. So it's just a feel good, you know, it's a feel good to know, like you said, you know, we're offering this program. It's out there. People want it. They want information. Is everybody going to, you know, is this going to be the right fit for everybody? Probably not. But just the fact, like you said, that we're offering different programs and we're trying to see, you know, where people are going to benefit the most from, you know, that's a huge plus. And I always tell everybody, you know, it's not a one size fits all. You know, you're going to have, you know, maybe loans that are going to be better than others. If we could find something that's going to benefit you, you know, yes, for sure, we'll give it a try. But, you know, just don't assume that it's the same, I guess. The same loan's going to fit for everybody pretty much. So we'll make sure that we offer you, though, whatever we think makes sense and that's going to benefit our clients.
All right. Now, we have Rebecca asked about mortgage insurance. So, Tom, what is mortgage insurance? Or Elizabeth, do you guys want to explain?
Yeah. Go ahead, Liz.
I've talked a lot. I was giving you a chance, Tom, because I talk a lot.
Mortgage insurance. It's called mortgage insurance, private mortgage insurance, PMI, MIP. It's required for anybody, or it's required for anybody to have when they put down less than 20% when purchasing a property. What it does, it insures the lender in the event that the borrower defaults. I can talk from experience. Regretfully, there was a time when I had a little bit of an issue with some properties, and yes, they come and took them away, but the bank got their money back, or a portion of their money back, because of the mortgage insurance that was on those loans. So it's really something that allows us to purchase properties, you know, with 3% down, 5% down, less than 20% down, which is the benefit for a lot of home buyers, or all of us home buyers, but it does insure the lender in the event of default.
Mm-hmm.
Does that kind of cover it?
Yeah, absolutely. It's definitely exactly what Tom says. It insures the lender. People get confused a lot with the hazard insurance or the homeowner's insurance. The homeowner insurance is to protect you in the events of more of a catastrophic event to the house, but it's also to protect the lender too, because if they've got a mortgage on your property, they like to see that there's actually a property there. On a conventional loan, the mortgage insurance will drop off automatically when you're at 22% equity based off of your purchase price. Or you can be aggressive and you can call your servicer once you have 20% equity based off the actual value. So except for an FHA loan, that mortgage insurance never drops off unless you put 10% down, and then it'll drop off in 11 years. But the mortgage insurance is kind of that hidden rate. And we priced out with probably about 6 different companies, mortgage insurance. So, you know, there could be a huge difference in a payment in mortgage insurance. So you could be paying $200 a month with one company, $100 a month with the other company. And mortgage insurance is very credit score driven. So, you know, you get a little bit better credit, you know, you can save yourself a lot of money on mortgage insurance. So again, it's just one of those hidden things that can be complicated. And as Tom had said, you know, you can have a mortgage insurance premium, which is a premium that you pay up front. On a VA loan, you pay the mortgage insurance up front, a single premium and then you don't pay monthly. But on FHA, you pay up front and you pay monthly. So you get it both.
On conventional, you just pay monthly.
Yeah.
So this is why sometimes we might have a borrower maybe going for a conventional loan, but maybe let's say their credit score isn't above a certain 700 plus. Well, it might be better going with an FHA loan because the FHA mortgage insurance is a set factor. It's a set number, regardless of credit score. When you get into conventional, it depends what that factor is, depending on what your credit score is. So a person with a 620 is going to have a higher math factor for the mortgage insurance than a person maybe with a 740. And sometimes that mortgage insurance can get up to 300, 400, $500 a month. And so that's when we'll consider doing an FHA loan, maybe because the mortgage insurance now it won't be as expensive.
Right. And it goes to say, sorry, go ahead.
No, that goes back to us again. That's another reason why we just like to ask a lot of questions, and just so we can put you in the right program. That's the main motivation to finding out a lot about it.
Yeah, and even with the FHA, that's one of the reasons why we always say also don't run from FHA loans that it's a bad loan or anything, along those lines, because it's not necessarily a bad loan. It's just sometimes I think it's just more affordable, if you would, for our borrowers. And sometimes, we don't want, if they could save a couple $100 a month on mortgage insurance and going FHA versus conventional, it's always an option. Nothing wrong with the loan. We're not going to close it later. We're going to close it on time. Everything's going to be fine. But sometimes it's just more convenient for our borrower.
Yeah, and if you hear, look, there are some loan programs that might be a little bit more challenging than others. But when you typically hear from a lender, oh, that's not a good loan, we don't offer that loan because of whatever reason, there's some reason why that lender's not offering that loan. So, like Mike said, whether because Heroes Loan, they don't want to take their margin cuts. Margin cuts really don't affect Elizabeth and I. So,
I see nothing. I said it from the beginning.
Yeah, when we sat down and I said, hey, they're cutting us on margins on these loans. I want to do a vote. Do we still want to do them? They were pretty much all on board with, we want to do the loan. We don't care. They said, we're here for the customers. I don't care how much money you're losing, Mike. We're here for the customers.
Elizabeth and I said, sure, we'll do them all day.
Actually, we use like about 50% of that fund that we saw. Just kidding.
We do. We had a good question. We have a very good question here from Roberto. And Roberto wants to know, is Elizabeth married? And I'm going to tell you, we get a lot of that. Not only is she married, she's married to an absolute saint of a husband.
Oh my God.
An absolute amazing husband, father, everything. But that question comes a lot. We've been ignoring that question. But Elizabeth definitely has a big fan base there. But
oh my gosh,
how amazing your husband is too.
The what? I'm sorry?
I want to see if Tom wanted to expand on how amazing her husband Anthony is.
Saint Anthony? Of course.
You guys are horrible.
We're defending him. When he can't defend himself, we have his back. It's all good.
I love how this is being recorded, so I'm sure I'll be able to tell him, play this back later.
Well, we have even, as long as we're talking about Anthony, we're going to be doing a little beach bonding this weekend for our office. And it's going to be over at Peanut Island. And somebody's going to show up on their boat and shuttle us over to Peanut Island so we can bring our coolers, our equipment, and everything. Who's picking us up on their boat to shuttle us over to Peanut Island?
St. Anthony.
St. Anthony's going to be picking us up about 7 a.m., 7:30. We'll be over there for the morning. And we'll hang it out till about noon or so.
You guys are horrible.
Horrible. We're part of your husband's fan club. I don't know what was horrible about that. All right.
Anyways.
Kevin here is asking what happens with the mortgage insurance real quick before we go. Again, as Mike said, if it's a conventional loan, you can call the lender, the servicer, discuss what their procedure is for removing the mortgage insurance. It's different with every servicer. And again, with FHA, that mortgage insurance is going to be on there for the term of the loan.
All right. Well, look, we are here every week, Facebook Live. If you're here, you know that. But also, we do classes every Wednesday night, homebuyer classes, tmfclasses.com. So go to tmfclasses.com and register for classes. We have a Zoom class every month for Spanish-speaking customers. We have a Zoom class for realtors. Elizabeth does multiple in-person classes at various places. She does PR Bakery every month. PR Bakery is amazing. What do you have coming up with PR Bakery, Elizabeth?
So PR Bakery, we pretty much settled on the last Wednesday of every month. We continue to help a lot of families, and it's just a great opportunity for people just to show up, have your questions answered. Heber Santiago and I we're just there just to talk one-on-one, answer questions. We're just there to help. And we have a lot of fun obviously while we're there too. We do raffles and just make sure that everybody's comfortable and gets to know us, what we do, and pretty much what the whole process looks like. And I think it's nice that we're able to meet people in person. And we had somebody from Belle Glade come out last month, which was absolutely amazing. I couldn't believe that. But they just wanted to meet us. They heard about that we pretty much sit around, talk about what needs to happen, and felt bad that they drove that far, but they just, they were just wanting to come out and just be a part of it. So we're there every Wednesday. I'll go ahead and post it this week with the upcoming date and time.
Belle Glade USDA loans. That's a great area. I
We
spent
talked
a
about
lot
this,
of time out there in a previous life. I love those areas. If you haven't been out to Lake Okeechobee, go out to Lake Okeechobee, and they've got Pahokee has a fish camp out there that's owned by a bunch of NFL players, but also Lewiston. Did you go out there, Elizabeth? You guys went out there.
Yeah. Yep, we were out there, Roland Martin, and then that was a lot of fun. Really, really, it's a great little place to fish, and just a good hangout. So. And
their fish sandwich is about as good of a fish sandwich as there is. So, all right, Tom. Anything else to add?
Yes, Independent Seafood has great fish sandwiches also.
Okay.
Yes, Independent Seafood. Yes.
Is that over on Georgia?
Georgia, yes. The food truck.
The food truck. I still got to get out.
And fresh. I mean, it just comes out straight from the water to their truck, to being filleted. I mean, it's just amazing. Every single morning you show up, and they just have the best seafood. So.
Well, speaking of food trucks, we're going to probably head down to Tacos Al Carbone right now. So I don't know if you're too far away, Elizabeth, but I think we'll be down there.
I could be there in 5.
Can you be there in 5?
Well, can you be here in 5 and drop off your credit card? And then...
Maybe you can just call it in for us. We'll go pick it up. All right, everybody. We appreciate you joining us. We'll see you next week. Thanks for the question.
Thank you.